Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, the 20th of January, 2022. My name is Russell, I'm Senior Market Specialist at FXCM. My email address is r@fxcm.com. And if I can just get you guys to confirm you can hear me, and see the screen. All right, it's because it's Friday, I've dressed down, so I'll wear my collared shirts again from Monday. Can I just double check? Can you guys hear me, see me, and see the screen? Okay, excellent. Thanks, Joachim. Bringing up the market commentaries disclaimer. So we'll have a shorter one today. I just want to do a quick review of the real rate and its correlation with NASDAQ, and then we'll do a look at Netflix. All right, and we will use market scope and trading view. So let's just have a quick look at the real rate. And you can get the real rate is at the top in zone 3, which is between the lower blue and lower red. I've got the NASDAQ in the middle. That's in zone 1, right? That's the upper red, upper blue. In other words, they're mirror images. And if you take a look at the correlation coefficient, it's a very strong negative 80%. So they're moving pretty much in tandem with one another, just in opposite directions. And it's really since the 29th of December where the real rate moved from zone 1 to zone 3, and then it moved from mid-zone 3 to zone 1. So the idea here is to keep an eye on the real rate. Correlation is still strong. And what's happening with rates now is that the voting members of the Fed are starting to diverge. So we've seen that there's always been division in the ECB. There's been heavy division in the Bank of England, and now we're starting to see the division starting to emerge in the Fed, where some members are calling for strong rate hikes, some are talking about moderate rate hikes. By and large, we're in zone 3, and that I think is reflective of the moderation in inflation. Let's take up the correlation coefficient. Let's take up the NASDAQ, and let's take up this vertical. And let's just take a look at the weekly chart here. And you can see the weekly chart, which is reflective of longer term rates, but that again is slipping into that zone 3. Not longer term rates, I beg your pardon, longer term trends. So it's slipping into that zone 3, and we're getting a squeeze. Starting to get a squeeze. Now, what happens with ranges when you get that squeeze? It's usually the calm before the storm, right? And then it depends which zone are we in. So here there's a squeeze, and then it had zone 1, and we had a sharp increase. So here we're going to get a squeeze again. It looks like we're about to get a squeeze. And if it stays in zone 3, well, then there's that moderation. That's the Fed pivot we're talking about. It's my base case scenario, subject to correction. If this moves into zone 1, that base case is going to have to be rethought, and then we go to sort of worst case scenario. Netflix came out yesterday with some, I thought, some good results. The subscribers that they added, 66% more than there was forecast. There was in excess of 7 million that was added, as opposed to 4.5, I think that initially forecast. Their operating earnings was very strong. Their bottom line was a little softer, but that was because of a one-off cash charge. So I don't think there's anything too meaningful there. But very importantly, their cash, what we call free cash flow, the actual after you've paid for all your capital expenditures, you had 1.6 billion left over, and they had forecast 1 billion. They're talking about a free cash flow in excess of 3 billion, or at least 3 billion for 2023. So this is a very interesting company all of a sudden. Now, the technicals, if we go to the technicals, let's go through to this chart first, which is our market. This is a weekly chart. We're looking at this in terms of the methodology, the 30-week exponential moving average. Here is your distribution phase. It drops below the 30-week moving average. That 30-week average turns down. The RSI drops below 50, and as long as we have that markdown phase, it stays below 50, and that is a it just denotes how strong the bearish momentum was. And then there was a really bad, disappointing result came through. I think it was second quarter last year. First quarter. Okay, so there's a gap down. There's a gap down, and then I'll show you the gap. If I just go down to the daily, you'll see the gap. Okay, on the I have to change settings here, but that's a gap. There's the gap here. Okay, so you can see the gap. Let's bring up that chart again. It's closed. It's odd. All right, no worries. We'll just carry on in this chart. Let me add in an RSI. Okay, my system's gone really slow for some reason. Let's go back to the weekly. And I just want you to ignore this middle chart for now. I'm going to look at that on the daily, but this needs to be adjusted with 30. Okay, so it was below its 30. It formed a accumulation sideways after that big gap down, and now it's moved above the 30-week exponential moving average. And importantly, that 30-week exponential moving average is pointing up. Look at the RSI. It's moved from that position below 50. It's now above 50. As long as we maintain above 50, there's that a bullish momentum here. Now, interestingly, if we take a look at this on the daily chart, we can get rid of the RSI now. And I want to just show you, so Weinstein uses a 30-week. So we're going to change this to 150-day, which is effectively a 30-week, right? It's just 30 times 5. And you can see here is the price above the 150-day. That 150 days turn up. That's exactly as we explained on the weekly chart. But this unbalanced volume here is really interesting because we did point this out previously in that you've got huge accumulation. That accumulation came in from about this area here. So after the stock, after net had been beaten down, really portfolio managers went shopping, and they've just been picking up since then in anticipation of the results that we're starting to see from Netflix. They've also now started a model where there's going to be revenue coming from adverts. There's going to be payments for sharing. They're doing away with the password sharing. I think there's going to be subscriptions off of that. And so the business model now is starting to reflect in the price, and you can see the accumulation going back all the way to really July through September and carrying on. So let's go back to the weekly chart here. And we can go away with unbalanced volume. And you can see this is the valued model distribution into markdown, into accumulation. Now we're moving back into markup phase. So very interesting chart to examine. We did look at it a few months back, but now that we've got the results out, well, it's really sort of marrying the technicals with the fundamentals, and you can see that on-balance volume very much a key indicator in really piggybacking off of the fundamentals. All right, with that all said and done, we can conclude at this point. If there's any questions, please go ahead and type those in. Any questions? Go ahead and type those in. All righty, so we'll wrap up here. Have a good weekend, guys. A good day ahead, and then we shall chat on Monday. And I shall be wearing a collared shirt. Cheers, guys. Have a good weekend.